All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market here today, a little up, a little down, a little back up, and we see the S&P here, trading up, about 18, 19 points, 20 points right now, about where it opened. So we saw kind of a gap up and a little sell-off down and, a little snapback here. Not a lot of news driving it, not a lot of, real content or real actionable news to kind of sink your teeth into with it. But we've seen the market, have a little bit of volatility in it. But let's face it, nowhere near the same level of volatility that we have seen, right? Not anywhere close. Not anywhere close. And I know if you're stared in on a minute chart or a 5-minute chart, it feels that way, but the magnitudes are very, very different there with them. And, we're going to have U.S. President Trump speaking tonight, and we'll most likely have trade war news here tonight. I'd be very surprised if we don't. I was surprised we didn't have anything last night, but it's one where talks were supposed to last 2 days. Obviously, they can last longer, but we're square in here on those. Now, this weekend, I was asked a question: who's left to sell? The market has to go up because there's nobody left to sell. Right? There's just nobody left to sell in this market. I mean, come on, we had this big sell-off. Who's left to sell? Everybody who was anybody sold during this, right? I mean, they're out. All we can do is go up because there's nobody left to sell. And that argument made. And, I responded. I said, well, let's just go take a look at a monthly chart. Now put on this perspective. Is there anybody left to sell? Looks a whole lot different. This sell-off is micro relative to the macro bull market that has been. Okay, and I know when traders get a little hyper-focused in the short term and everything else, you lose perspective of some of these, longer-term elements. But the reality is, when it comes to the markets, prices can change without people buying and selling. We saw that this morning. There was a gap up in the market. Was it because people were buying? Did certain stocks, did they gap up because, people bought at every single price level to push it up? No, that didn't happen, right? Prices can change. Boom. They can just instantly change, right? And that is an element here that exists in the markets, and it's not going away, and has to be taken into account with things. But whenever we're talking about is there anybody left to sell, we can go and look at money flows. We can go throw on things like a Chaikin money flow, right? Which is a really interesting indicator, which has a whole lot of positives here to it. But even here on the monthly chart, it still shows that overall there's been more buy pressure than sell pressure. But even the monthly Chaikin money flow, it barely went negative back here in the financial crisis, right? So it's not exactly something that you go, well, okay, if this goes negative, then nobody's left to sell or anything like that. On a daily version, it starts to look a little bit different, right? But overall, is there anybody left to sell here in this market? And one of my favorite things to look at is a commitment of traders chart, oftentimes referred to as a COT chart. Okay, now these charts are very interesting. It's hard to find free versions of these charts. One of my favorite sites that used to have free versions of it turned it all into a very high-priced paid version. But here's one on a site that I'm subscribed to. And this is referred to as a commitment of traders chart, and this is looking at S&P futures. Okay. Now, COT charts break down in a way where it will show large speculative positions, small speculative positions, and commercial positions. Right. Now, you can think of futures as, betting on the upside, betting on the downside, right? So there's not a, hey, they're either in or out. They're, which side are they kind of betting on? Commercialize, commercialize most often and almost always, they're short here, right? And I don't read too much into this, right? Other than generally when this commercial side hits a low, generally the market's done selling off. And there's no coincidence that that the S&P 500 on this day, 6/19/18, which was a let me pull it up. Which was a quadruple witching, right? Where we had a whole bunch of stuff expiring. Here, this is where it happened, right? Right here in June. It didn't happen at the bottom, but we're pretty close to the bottom when that happened and when all those contracts expired, right? Because this is what happened. A lot of these contracts ultimately expired. So you'll see some big shifts in certain dates, right? So, right here was just a big shift. And so, they expired. A lot of these contracts expired. And, we saw, a little further selling on it and then, some repositioning. But overall, who do I care about? Now, the large speculators and the small speculators. And here's the reality. The small speculators, they're oftentimes right. Not always, but they are oftentimes right. I look at the small speculators as the smart money. Large speculators, I look at as the dumb money. The much slower moving, masses type of money. And you can see large speculators, are they really out of this market? I mean, they took a dip down, but they've been buying back in. They're nowhere near anything negative or even anything where they were back here during the sell-off earlier in 2018. The large speculators continue to have, some pretty hefty upside positioning. Now, the small speculators, they got out ahead of the big drop, right? And they weren't loading in when the market rebounded a little bit. And, then things dropped again. And here over the last couple weeks, throughout the month of December, we've seen small speculators really upping their positions, right? They've started to buy back in. They've started to, really, really kind of get back in here. Commercial, where is it at? Well, they're still strongly negative, but they're not negative to the point where, man, they've got to just hedge everything, right? Because that's all a lot of the commercial is hedging, right? Because they can't just go and sell everything they have. When you're a multi-billion-dollar company, it's not like you can go and all of a sudden, let me just sell a 5% stake in IBM. No, it doesn't happen that way. They're not trading it. But market conditions get to the point where they have to, get involved in the futures market, pretty heavily. But overall, we are seeing that, from this, there is not a over negativity that would suggest, hey, bottom is it. There's not a, oh man, everybody's been washed out of this market and no one's afraid to touch it, right? And everyone is afraid to touch it. We can see that in this weekly or monthly chart here as well. While, yes, it is true, we don't need to see, just sell action to drive all the way down. It can gap and everything else, and it's not necessarily, the price isn't necessarily indicative of, hey, there's nobody left to sell. We can pretty much see that, look, this market could drop a long way. There is still a long big sell because this isn't, most people aren't playing stock market. Most of the major funds aren't playing stock market out there the way that, individual traders do or the short-term, perspective traders do. Traders are often looking at 6-month charts at max, right? Where long-term investors looking at the big bad bull and bear cycles, and they look at this and go, okay, here's another little correction. There are still huge funds, that when we see the 13Fs get filed, that are still actually adding, throughout here. When we go in one place to see it is Street Insider. But you can come up here to, let's see, where is it at now? Hedge funds. You can come in here to 13Fs, right? And these 13Fs basically show, what these different firms are getting in and getting out of, over the course of the past 3 months. So when we see the 13Fs, you're going to see that, yes, they liquidated or they lowered positions, but they're not all in and all out. Very rarely are they all in or all out. They're going to trim 10%. They're going to trim 5%. They're going to add 20%. They're going to trim 30%. They're going to trim and add, not get all out or all in. And so there's always somebody left to sell. There is always somebody who needs to sell based on, what the market conditions are. We could talk about oversold and everything else, but there are always people who are left to sell. And so, it's very difficult to go out and make an argument and say, well, nobody's left to sell. Who can still sell? Right? Everybody who's sold already sold. That's a very difficult argument to make in any market, including the bottom here of 2009. Right? Yep, bears turn to bulls, bulls turn to bears. They're switching and everything else. But there's always somebody left to sell, and on that other foot, there's always somebody left to buy. What's a lot of the money that flows into the markets? Where does it come from? Right? Is it somebody taking their paycheck and going down and depositing it into a Options Express account and going out and buying call options? No, that's not where the majority of the money of the market comes into play. Most of the money in the market is actually created by the market. Right? That's where a lot of it's created. But there's another huge portion of it that is created by, IRAs, 401ks, where people will, get 401k matches at their jobs. They allocate that money and it needs to flow in, right? They're not playing in stock market. They're just allocating that money. And that could create some inflows and some outflows. It's one of the reasons why first day of a new month is generally higher, because we see some of those inflows that have to come in. We actually see them come into to the market. And they're not worried about upgrades and downgrades. What Jamie Dimon said and what Bank of America said about Caterpillar and all of that, hubbub that traders get, ultra focused on. They're worried about, okay, do I have exposure? Where's my exposure? And looking at things from a 5, 10, 15, 30-year time horizon, not we have a little bit of a trade war with China. What happened down here? Well, people like my own father, who just got totally panicked, right? He'd been for 30 years investing in his 401k. Putting money in, and allocating it, and just saw so much evaporate that he finally just took it and said, forget that. I've got to go to something safe. And, then he was left in a, terrible position as it went back up and going, oh, man, what do I do, right? As were many. And so when you start to hear, commonplace that, family members who know nothing about the market are all of a sudden now going, oh, man, I've got to get every little bit of exposure that I have out of there. Yeah, there's probably not many people left to sell. But we're not in that position right now. Yeah, some people who like to play stock market, are doing some of those things. But we're not in that position at all right now. Not even close. We haven't gone through a housing crash. We haven't gone through a big period of high unemployment. We haven't gone through any of those macroeconomic factors that would create another huge additional outflow of money in this market. Right now, we've seen what? Hey, a small little correction. That's what we've seen, right? And if you go back and look at history, these aren't uncommon. What's uncommon is going as long as we did without one, right? That's what's uncommon. But having these, these are fairly common. We can see them over and over and over throughout the course of history. But just because we have one of these doesn't mean that everybody's out, everybody's selling, nobody is left to sell, out there. I think we can make that argument that nobody's left to sell. When we start seeing the COT charts and we see the speculators way, way overly negative, and they start to go up, and they haven't even turned negative at all. They're still, they've always had net positive positions here over the course of the last year. Okay, so anyway, my couple thoughts there on that, and what that is looking like, what that's looking like here. Okay, now market. You can see it's back to kind of where it was, and where it was around this open. And I was on video back here. We talked about, today could be, kind of a volatility compression day, just kind of not a real directional day. And yes, we got the sell early. And, we don't get any bottoming volume. We don't get anything that indicates, okay, you know what, it's ready to snap on back. And, we just have, general market forces, just kind of taking shape here. It's one where I do believe if we gap down tomorrow, let's just say the market closes here, I do believe a gap down tomorrow will be sold and sold aggressively, and sold to potentially this degree right back here. I'm not saying the market's going to gap down. I'm not saying it has reason to. Obviously, a gap down is going to be driven by some of the news of tonight, right? But all that news could easily create that gap up and that move up here into the 260, 262.5 area on S&P futures. So, when I look at this market tonight and I look at the risk factors, can you go and say, going into the close today, hey, you know what? The odds are, strongly in the favor of the bulls or in the bears. From a pure technical standpoint, you can't, right? You just can't, really kind of put odds one way or the other there. Okay. Now for the challenge, I have a position on GLD that I bought earlier, talked about it, and it's pretty much sat in the same spot here. I don't expect it to go, too far here today, or too far anywhere here today. This is something where if the market falls off tomorrow, I think there's a good chance that it rallies nicely. If the market rallies tomorrow, I think we'll see the U.S. dollar sell off, and that would create a little uptick in gold. So I think either market rally or market drop scenario creates a scenario where we could see some positive pressure on gold. So in there, and then been looking at some potential entries. One that intrigues me is Home Depot on the put side. But this is just one of those where, regardless of where it closes, whether it's down $1 from here, up $1 from here, it has that same element where if it gaps down tomorrow, it's got a ways to sell. And so I look at any kind of put buy as, hey, I can wait for that confirmation, to get that confirmation. I don't have to go in and chase that. There's so many things like Bank of America, Home Depot, all kind of doing the same thing, near upper bands. And, if the market rallies 50 points tomorrow, these things are going to be up, and they're going to be up nicely, right? And it's one where I don't have to take that put risk going into the close. I can wait till the open tomorrow and get aggressive from there. So most likely I'll go into the close holding my GLD calls, and then I will look to I'll look to add some puts on a variety of things. A lot of these stocks that are up at upper Bollingers, I'll look to add some puts on tomorrow if we gap down. And if the market gaps up, we'll have to kind of see what the news driver is there. Either way, we'll have to take a look at some of the news driver there. But I'm not going to be overly aggressive. Just challenge isn't in a spot where I can be overly aggressive, but at the same time, I don't have to be, as conservative, as I was when option prices were significantly more expensive. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.